We're only a few weeks in on the new year, but there's already so much to talk about with the Canadian economy. Interest rates continue to go down while inflation seems stable, but who am I to say? Joining us for his quarterly visit to give us his expert opinion is Chief Economist at Bank of Montreal, Douglas Porter. Douglas, first of all, Happy New Year and welcome back to Just Good Business.
Thank you very much, Al, and Happy New Year to you as well.
Now, let's take a final look back at 2025 before we go ahead. What do you think the top three stories were? I mean, I can imagine what they might have been, but what, in your opinion, were the top three stories as it pertained to the Canadian economy?
So I wouldn't want to be facetious, but my initial answer would be tariffs, tariffs, and tariffs.
Right.
But in reality, of course, there was a lot more going on than that. And I think one of the big stories is actually how well the Canadian economy managed to navigate the trade war, which just seemed overwhelming early in the year.
Right.
So I would rank that as the number one story is of course the trade war that erupted. And actually, at the end of the day, Canada was let off on a number of areas. It really was much more focused than initially advertised. It's basically on auto, steel, aluminum, lumber. Those are the sectors that are really heavily affected and harmed. But the rest of the economy really was let off of the U.S. tariffs. But the trade war really was the dominant story. And I think how the Canadian economy managed through it. Second, I would rank, of course, we had a new government, the Carney government. We had the election and the first budget, which didn't come until November. But I think that was the next big story and how the Carney government tried to reorient the Canadian economy a bit away from the U.S., trying to strengthen business investment to, time will tell to what extent they're successful on that front. You cannot turn an ocean liner around on a dime. This will take time. But I thought it was a good effort. And the third story is everything related to AI, I think. And, I think that's the big story as to how the global economy and the U.S. economy in particular just managed its way through all this trade uncertainty as we had this massive wave of spending on AI. And the way it filtered into Canada is we had one of our, best stock market returns that we've seen this century, the second best of the last 25 years. And some of that was the AI. And, of course, the surging gold prices was the other story behind that rollicking ride for the TSX, but I think that was the other story.
Yeah, I don't disagree on any of those three stories for sure. I mean, AI is going to have a huge impact, not only on employment, but our power needs, the power grid and stuff. It's going to be really interesting to see how things pan out in 2026. Now, the overall inflation ended the year, I think, at 2.2%. Is that correct?
It did. We just recently received the update for the month of December when it came in at 2.4%. The little bounce at the end of the year comes with a bit of an asterisk because remember we did get a GST holiday on restaurant meals and liquor a year ago, so that actually reduced the CPI a year ago. But of course, we also had the carbon tax removed this past year, which in a stroke reduced Canada's inflation rate by about 0.5 point.
Right.
Separating out those two special factors, Canada's inflation is probably I would say it's in the high 2% range, which is about what we expect for the year ahead.
Yeah. And you mentioned Carney's budget that came out but in November. So maybe not enough time yet to see the effects of that, like the diversification of our economy. What, if anything, does it say about those efforts?
So I don't think we can really read that much from the inflation report in terms of his efforts to diversify the economy. I think where that will show up ultimately, and if he's successful, is, we will see it help support employment and overall growth. I don't anticipate the efforts to diversify having that much implication for inflation. Where we've seen some pressure, the groceries have come back a lot. And some of that is the grocers are actually trying to diversify away from the U.S., whether it's Canadian sourcing or even elsewhere. And that is having a bit of an impact in pushing up grocery prices. Lots of other things going on. Meat prices are rising for completely other different reasons. That's a U.S. story as well. But unfortunately, I think grocery prices are going to be a thorn in our side throughout 2026.
Yeah, that's unfortunate. Now, for small business owners, what would you say matters most to them? Is it like the direction of interest rates or the speed of change? We've seen interest rates come down, drop from 3% to 2.25, I believe was the number at the end of this year. Is that enough or is it not fast enough? What would you say is most important for small business owners?
Well, I think, and I hate to waffle on this answer, but I think both matter. The change and the level both matter. And of course, it depends what kind of business you're dealing with. But I would say from a bigger story, the Bank of Canada is probably just about done, if not done, cutting rates. Remember, they got as high as 5% on their overnight rate. Now we're down to 2.25%.
Right.
That's a pretty dramatic change in about a year and a half.
Mm-hmm.
And they've all but told us they think they're finished cutting rates. So now that doesn't mean they're going up. I actually still believe if there's going to be any change in rates this coming year, it's more likely to be a small reduction rather than a small increase. But I think the big story is rates are back to quote normal.
Mm-hmm.
I don't see zero rates as being normal like we had during the pandemic. That's not normal. Something around 2% or a little bit higher is what I consider to be normal for very short-term rates. A bit higher than that for mortgage rates. But, when we look back over the last 25 years, this is about as normal as we've been for interest rates on either side. And I suspect we're going to be around this territory for a while. And that's not a bad world for small businesses to have a bit of certainty on that front and have rates a little bit on the lower side than what we've been used to the last few years.
With the interest rates finally coming down to an quote unquote normal level, do you see real estate maybe making a bit of a comeback this year?
I do in certain parts of the country. And let's face it, there is a really different story when you go to different regions of the country. Like if I travel to Quebec or Alberta and talk about a real estate correction, they don't know what I'm talking about. Those markets have been very solid throughout, as they have been in Atlantic Canada and some of the other prairie provinces. Mm-hmm. The correction is mostly an Ontario and a BC story, especially Ontario. I don't think that correction has necessarily fully run its course in Southern Ontario. The reality is affordability is not back to normal.
Right.
And with interest rates going probably about as low as they've got to go, the only lever to get affordability back to reasonable levels is to see the home values come down a little bit further. I'm not talking about a huge further correction. They've already corrected a lot.
Yeah.
But I think they're going to remain under a little bit of pressure still. And the fact the population growth has slowed so much, that's taken a bit of heat out of real estate as well.
If home values continue to drop, though, do we risk maybe recession or do you think it'd have to be a pretty big drop for that to happen?
I think it would have to be a much bigger drop than what we've seen. Keep in mind, the national reported home prices have come down by 19% from their peak in 2022, but it's been spread out over almost 4 years. So it's not felt great, but it hasn't felt bad either. In some ways, we've gotten back to a better balanced market in about as healthy a way as we could have possibly done. Mm-hmm. The kind of decline in home prices I see, again, is pretty localized. It's not big enough to really destroy consumer confidence.
Now, as you had warned earlier in the year, unemployment was probably going to go up this year, and it did. It peaked around 7.1% in August and in September before finishing at 6.8%, which is up 0.25% from where we started in January. We mentioned, the Prime Minister's significant investment in his budget to accelerate construction of nation-building projects and all this great stuff. This should be good news for those concerned about unemployment, right, for 2026?
It will help. And frankly, I think one of the pleasant surprises over the past year is that the unemployment rate didn't rise more than it did. Mm-hmm. It's really very little change in the last year. And I think most economists have actually been pleasantly surprised. Now, part of that story is the growth of the population has slowed very dramatically as a direct result of caps on immigration, especially students. So we've actually seen the youth jobless rate come down a bit. I'm not sure we're completely out of the woods. The offset to a lot of the infrastructure spending, the defense spending is we've still got this massive question mark over what happens with trade with the U.S. Right. And I'm still concerned that we're not going to be able to reach a full form deal on USMCA with renewal with the U.S. this year. I would not be shocked if we have to review it again next year.
Sure.
And unfortunately, as long as we have that uncertainty on the trade side, there is the concern that the unemployment rate might drift up a little bit from here in the next 6 months. But I see if we look out into 27, I would see it coming back down by that point.
That's good news. Let's hope that happens. So let's look at risk and end it on a positive note. We'll start with risk first for 2026. For small businesses, what should owners look out for in 2026?
Well, I hate to bring it up, but really the geopolitical backdrop to me is the thing that keeps, if anything keeps me awake at night, it's that.
Yeah.
It's all the uncertainty we've been dealing with. Look, even in the first 3 weeks of 2026, we've had to deal with all kinds of headline events, especially out of the White House. That's not going to go away. But there's lots of risks, and I would have to circle the USMCA renegotiation or review as being the number one risk from my perspective. Another thing, and I almost shudder to bring this up, we do have a Quebec election later this year, and the PQ is leading in the polls, and they have openly said that they would like to hold a referendum if they are reelected. And this is like a trip to the dentist, but it's something that we have to keep on our calendar or radar for 2026. So those are some of the risks I'm looking at.
So let's end it on a positive note. What are you looking forward to for the Canadian economy in 2026?
First of all, I want to say the economy and the markets have managed through a lot of policy uncertainty over the past year. We're going to be dealing with a lot of noise this year as well. Let's try to look through it. I think there are reasons to be optimistic. As I said, interest rates are back down to normal levels. Inflation, well, it's not quite all the way back to normal. It's past those really big increases we saw in the past, and we've had a tremendous performance by the equity market in the last year. Usually, that is a good leading indicator for the Canadian economy. It's not that well represented in the Toronto Stock Exchange, but the very strong gains we've had in the last couple of years, to me, that gives me with a bit of sense of optimism that is foreshadowing better times ahead.